Now, section 2 of chapter 8 is the hardest section of this chapter. Okay? Would you agree section 1 was pretty nice? Like that one, nice welcome back after break to review a little bit of accounting, debits and credits. You already done a lot of work. We just have to journalize it. Okay. Why do we go into business? To make money, right? That's the whole purpose of why we go into business. We do have service businesses that their sole purpose is not to be profitable, but they still have to at least break even. They need to have a little bit of money to invest back into the organization, whatever service. So the same type of thing, they have to at least break even or have a little bit of money. So when we go through and determine whether or not we've made money or lost money, what classifications do we deal with? Revenue and expenses, would you agree? That's going to be all we need to know to determine whether or not we've made money or lost money. What do we hope is bigger? Revenue, right? If revenue is bigger, we have a net income. If expenses are bigger, we have a sad sticker face and we have a net loss. Okay? Now, here's the thing. In accounting, this is going to blow your mind. Are you ready? You ready? Lauren, you ready? We have permanent accounts and we have temporary accounts. Oh, I know. This is a big concept, and this is, I know. This is one of the things that tends to make this part a little bit harder. When you walked into accounting class, what's the first thing I taught you? The accounting equation, assets, liabilities, and owner's equity. Would you agree? And then from there, we learned about debits and credits. Then we learned about revenue and expenses. But the basic first thing we talked about is assets equals liabilities plus owner's equity. Assets, liabilities, and owner's equity are permanent accounts. What does that mean? They never close. I can go back and look at cash and find out, since a business has been in operation, the money going in and out. That's important stuff for me to know. Would you agree? Now, if my business has been around for 20 years, should I have a total in rent expense for the last 20 years? Is that important to me? Rent expense, do I need to know the last 20 years, or do I need to know this fiscal period? This fiscal period, right? Because that's what's important, because I need my revenue to match up with my expenses. Concept of going concern, okay? When we look at my revenue and my expenses, those are called temporary accounts. We have them open only for the fiscal period, and at the end of the fiscal period, we have to get those to zero. Okay? Now, expenses have what for normal balance? Oh, you're killing me. Debit. I know that was really hard, and it's like almost 10 o'clock, and I asked you to think. Okay, expenses have a debit normal balance. Would you agree? So, if it has a debit balance of $50, how do I get it to zero? Credit at 50. Would you agree? And then that account is going to have a zero balance. Okay, so what we have to do in closing entries, which is section 8.2, we have to take our temporary accounts, which are our revenue and our expenses, and we have to close them. We have to get them to zero. Because I don't want this year's rent expense to be with last year's rent expense. I just want to know for this fiscal period how much I spent in rent. That's important for me to know for revenue also, would you agree? I need to know this fiscal period how much money I've made. Not since I've been in business for 20 years that I've had $3 million in sales. That just sounds awesome, but it's not realistic, because I need to know for each year that I'm making money or losing money what it is. So for our temporary accounts, we go through at the end of every fiscal period and close them, get them to zero. What does that mean? For the next fiscal period, when I look at all of my temporary accounts in the ledger, all of them have a balance of zero or nothing. Okay, so that's why when we started journalizing transactions, cash sometimes will have a balance in it, but when we first start out the fiscal period, none of our temporary accounts or our revenue and our expenses will have a balance. Now, My door's already shut and they're really loud out there. We have one account that we have not talked about yet that's on our worksheet. Which one is it? Income summary. Remember I said just ignore it. We'll get to it later. Today is later. Yeah. Didn't even know it was coming, did you? Wham. Walked right into later. Okay. Income summary is also a temporary account. Okay. We used income summary as a place to hold our accounts just while we're closing them. Okay? When we make a net income, who gets that money? Who? Lauren, who gets the money? Looking for something a little specific. Not just a business, but whom? Owner. Owner's the key part to it because we have an account. I didn't hear it. You speak for yourself. Say it louder next time. Own it. Be proud. Okay, the owner. And the reason I wanted to hear the word owner to that statement, not business, is because when we hear owners, we think owner's equity. Because we have assets, liabilities, and owner's equity. Those are our permanent accounts. They never get closed. They never have a zero balance, okay? We know that eventually our net income has to go to that owner. If it's a net loss, the owner also gets the net loss. Would you agree? Because no matter what, it's going to affect the owner. So we have to go through and we have to close our accounts. And we have to close our accounts. We close our revenue. We close our expenses. We close our net income. And then we close our drawing. So we have 4 closing entries that we need to do, and that's important. Our adjusting entries, guys, you already know this. This is really the hardest part of the chapter, and this is going to cause you the most problem on the test. Our adjusting entries are easy. Each adjusting entry takes 2 lines. We are going to have multiple lines per transaction when we go to journalize this. But what you need to realize is we have temporary accounts, revenue, expenses. We have to get them to 0. That's the first goal. Then the next goal of closing entries is to take our net income and get it into our capital account or net loss. And the last thing we have to do is drawing. Drawing is an owner's equity account, but it's a contra owner's equity. We want to know each fiscal period how much money the owner takes out. So we're actually going to get at the end of this fiscal period our drawing account to 0 also. Okay? So this is the hardest one. I'm going to give you some acronyms that are going to help you go through after we do this. I'm going to review a little bit on Monday when we have school, even though it's going to be, what, a minus 50? I don't know. Come here and hang out with me. It'll be warm here with our computers running. If it's as cold as they're going to predict, I'm going to say no. But don't worry. I'll still teach you accounting.
Put a video up.
She's going to be doing all the assignments at home.
I will. You know, you could all log onto the computer, and we can have a Google Hangout, and I can still teach you that way.
Trying to get me up.
YouTube live stream.
Nope. Google Hangout.
Yeah.
They do. Okay, so here is my worksheet. My numbers are really tiny. Are your numbers tiny on the worksheet too?
Yeah.
Woo! I'm going to make it a little bit bigger. You ready for my first hint? And they both get bigger, yep. What are we closing? Revenue and expenses. Where are those revenue and expenses located on here?
Under income summary.
Yes! Under our income statement column. Did you say it? No? Okay. Who did? You gotta speak up. I heard him say it. Speak up. Under income statement, everything that has a balance in your income statement column has to get to 0 for closing entries. That's the purpose. That's the goal. We don't want it to have a balance anymore. Okay? So we are always going to close revenue first. Okay? Revenue has what for normal balance? Debit or credit? credit. Do you see that there? Okay, so it has a credit balance. What do we have to do to get it to zero? Debit. Okay, so we are going to debit sales, and then we have to credit another account. And that other account is going to be income summary. This is how we're going to use that account. We're going to use it to close accounts into it. Okay, closing entries, we do not have any source document information, so we need to, for the very first thing on line 6 here of the journal, we're going to put the heading in there, closing entries, just like we did for adjusting entries. Adjusting and closing entries are always done at the end of the fiscal period, okay? And we know for this business that the last day of the fiscal period is July 31st. Now, I don't need to write July on here anymore because we already wrote the month on the very top of the page. We need to, for every transaction, every matching debit and credit, put the date. So I told you the first closing entry that we're going to do is going to be revenue. We're going to close our revenue. And the revenue account that we're closing is sales. Sales needs to be debited or credited? Debited. So it's got to go first, because remember, we always have to put our debits first, otherwise Aplia says, naughty, naughty, naughty. Okay, so sales is going to be debited for $5,511. And what did I say we're closing it into? Income summary, that account I said we're going to use later in today's later. So we're closing sales into income summary. So, oops. We just closed our credit amount on our income statement column. Now we have to close our debits, okay, which are all of our expenses. I have advertising, insurance, miscellaneous, and supplies. What do I need to do to get those to zero? Credit them. But I can't put a credit first. What am I going to close them into? Income summary. But I don't know how much it is yet. Okay? So I'm going to put the date of the 31st, and I'm going to put in income summary. But I don't know how much it is, so I'm actually going to leave the amount blank. And then what I'm going to do is I'm going to list all of my expenses in the same order that they're listed on my worksheet, and I'm going to credit them. So I'm going to credit advertising expense for $821. Then I need to do insurance expense. And insurance expense is going to be $300. Remember, I said we're using all of the information from our income statement column. What column is missing on this worksheet? Trial balance. If I looked at trial balance, what would the balance of insurance expense be? 0. You always need to use, for your closing entries, use all of the numbers from your income statement column. Okay? So just go through and do all of your expenses, advertising through supplies, using the numbers again from the income statement column. So here's an example where I have 4 credits. Would you agree? Now, what I need to do is I need to add up those credits. The total of those credits is what I'm going to debit to income summary. I don't know. Anyone else agree? Kira? But you got to make sure that you typed up your numbers so you didn't make a mistake, because otherwise your debits and credits won't equal. Let's look at your last test.
Ooh.
Oh. He opened up the door. I just walked through it. Okay, $2,181. Now, Ready? Now this, you have to think on this one. What does income summary equal? Conceptually, I don't want the number. No. Net loss or net income. Because what have we done to income summary? We put our revenue and we put our expenses in there. Would you agree? So therefore, the balance of income summary right now is our net income or our net loss. Would you agree? Because we closed revenue and expenses in there. Now, is this a net income or a net loss? How do you know? Says where? But it's on your worksheet. It gives you your net income. Would you agree? It throws it right out there. Use the information that's already given to you. That's awesome. So we have a net income. Okay. What should a net income do to owner's equity? Make it go up. Would you agree? So our capital account needs to be debited or credited. This is where you need to know your normal balances. Remember all those wonderful T accounts I gave you all the time? Really need to know this stuff. What side of the accounting equation is it on? Okay. Normal balance of capital is a credit. So if we need to increase owner's equity, we need to credit our capital account the amount of the net income. Does that make sense? Okay. So we are going to credit our capital account. What account's going to get debited? No, you just said you're going to credit that. What account's going to be debited? Income summary. Why are we doing debiting income summary? Exactly. We need income summary to get to zero also. So we just dumped in our revenue and we dumped into our expenses into this one account, and now we need that account to get to zero. Now, why didn't we just put it all into our capital account? This is some deep thinking. Well, but why? I'm coming closer so I can hear you. Net income or net loss. But I could still put my revenue and expenses into there instead of putting it into income summary. But when I put it into income summary, it's a way to double check. But the other thing it does is every fiscal period, if you look on the last day of the fiscal period in your capital account, you have a spot where you can see the total of your net income or net loss. Does that make sense? So over a period of years, you can go to one spot and look in your capital account and say, hey, at the end of this fiscal period, I had a net income of this. Next one, I had a net loss of there. Instead of having to go through and figure out revenue and expenses and all of that in there, it just makes your capital account look a little bit cleaner so it doesn't get as long many transactions in there. Okay, so my third closing entry that we're doing today is to close income summary into my capital account. Okay. So I'm going to put the 31st, and I'm going to debit income summary. And I'm going to close income summary for $3,330. How did I mathematically come up with that wonderful number?
Or it's on the income.
I subtracted those two numbers, and it's also the amount on my net income on my worksheet. And what am I crediting? Darlene Wong Capital for $3,330. Does anyone remember the last thing I said we're going to close? Our drawing, our withdrawals, right? Okay. Now, when I look at drawing has what for normal balance? What do I have to do to drawing then? Credit it, okay? Does that make sense? The purpose of closing entries is to get drawing to zero. It has a debit balance. What do I need to get it to zero? I have to credit it. What am I going to close it into? Capital, okay? So we just said that drawing has to be credited, so therefore what does capital have to be? Debited. So we're going to put Darlene Wong Capital, and it's going to be debited $2,100. We're lowering our capital, the amount of the drawing. And then I am going to credit drawing 2,100. Okay, you ready? Now I'm going to put accounting 2 on the spot. Accounting 2, are you ready? Come on. Pressure's on, accounting 2. You ready? I'm doing closing entries. You never, ever, ever, finish my sentence, close capital. Do you remember it? I stand there and don't do it! Don't close capital! I'm going to guarantee on the test for this chapter, at least 4 of you are going to try to close capital. Okay? Because what you get is you get to the last couple transactions and you just remember, I don't know, I got to do some stuff to capital, and you pull capital in there and you're like, oh, I got to close some things. But I spent a lot of time today at the beginning talking about permanent and temporary accounts. I changed it up a little bit just so you realize that assets, liabilities, and owner's equity we never close. What we do close are our temporary accounts, which are going to be our revenue and expenses, and our contra owner's equity account of drawing. Okay? So what we need to do now is post. Okay? So what account are we going to post to first? Sales. Now, please notice this line right here. Bing, 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 bing. Ooh, ooh, ooh. Aplia will mark things wrong if you don't do it right. Please type a 0 in both the debit and credit balance columns to indicate a 0 balance. So this first transaction, we are closing sales. Sales is going to have a 0 balance. Aplia is telling you you have to put a 0 in both debit and credit columns. I need to make my screen size smaller. Whoops, a little bit too small. Okay, so when I open up sales, I'm going to put the date of the 31st. What's my post reference? Why? Oh, that makes me happy. Okay, and then I'm debiting sales, $5,511. Okay, it has a balance of 0. Would you agree? 0 in the debit, 0 in the credit. That's what Aplia is telling you. Now, if I was not doing Aplia and I was doing this on a piece of paper like you might be getting coming up soon, hint, hint, what I would do is I would actually take my writing utensil and I would draw a straight line and a straight line all the way across. Why don't I leave it blank? Yeah, and then it looks like you didn't do it. You just forgot to finish it. So if I was writing it on a piece of paper, I really would take a straight line and put it through there just to show, hey, my balance is 0. I didn't make a mistake of anything. Okay? Let's go ahead and then post this to income summary. Now, income summary does not have anything recorded in it yet because this is the first time we should have used this account at all for this fiscal period. So I got to put in the month of July.
You have to do something.
Oh, I did. 410. I got to put my account number back on the top. Thank you, Colton. Good call on the birthday day. Called me out on a mistake. Awesome, awesome. Post reference. It's his birthday. Post reference of 4, and I'm going to credit $5,511. Now, I'm not going to forget this time, Colton. I'm going to take my $330 and I'm going to put it back up in the account to show that I did post it. Now, amazingly, I have to post the income summary again right away, don't I? Okay, so I'm going to put the date of the 31st, put the 4 again, and I'm going to be debiting it $2,181. And you need to not just type in $3,330. Really, check your math. Yes, I do. Because you could have made a math mistake right here for the $2,181 or the $5,000 you can transpose, and you need to make sure that you really did it right. Otherwise, the next step, Section 8.3, isn't going to come out right, and then you're going to be mad, and you're going to be like, I didn't do it right. And I say, well, you did a math mistake, and then you get all mad, and it's just not good. Did we do it right? Okay, so is my balance debit or credit? Why, Colton? I agree it's credit.
Because we're not debiting the whole thing.
Which one's bigger? Yeah. Credit's bigger, $330. Then I put $330 back up top, and then I'm going to go to advertising expense. Day of 31st, post reference 4, and I'm crediting it at $821. And I have to put a 0 in both the debit and credit to show that it has a 0 balance. I just did insurance expense, now I'm doing miscellaneous. Oh, I'm a speed demon. My brain is wired for accounting. There, closed all my expenses. Posted them. Justin, don't forget to put your account numbers back up here for when you posted them. You're doing okay? Oh!
That's my mind is so big and my computer's turned that way.
You're allowing your neighbor to copy?
Well, she had it.
I know, I did. I see it. I have the answers right in front, so it's like...
Sure, Steven, that's what they all say.
Yeah.
Just watch our YouTube videos. Everybody else is.
Everyone else in the world in North Carolina. Hello, North Carolina! Well, I did. Just said it to him.
Did you really just say it on
video.
Okay. On line 14, I'm closing income summary.
That's one question.
Mm-hmm.
When you go into your journal, no one it has for balance 347, but sure doesn't credit. Why?
Because it's a balance.
Oh.
Right here it says balance. It's not showing an individual amount of a transaction, so it's just showing the balance. Okay. So I am to line 14 of my journal. Income summary is being debited 330. So let's put the date the 4th. Debit 3,330. And I have to put a 0 in the debit and credit balance column to indicate that, hey, I have a 0 balance and I want a 0 balance, and then I got to put 330 back in there. Then I'm going to move to line 15. Line 15, I am posting to Darlene Wong Capital. Put the date of the 31st. Again, post reference is 4. And I'm crediting $3,330. Now, really, you have to get your calculator out. Because Darlene Wong Capital had a credit balance of $6,543. I credited $3,330, so we need to then say it again.
9,873 is what I got.
Anyone else agree? Concur? Same. Thanks. You have to add because they're 2 credits. Account number 310 goes back up on top. Now, the last thing we have to do here on line 16 is we have to again post a capital. How convenient that we still have it open. And I have to debit it $2,100 because I have to close my drawing account. So we're going to have $7,773. I can do that one without a calculator. Hope you can too. The last one we have to do is then our drawing. The date is the 31st. Post reference is a 4. Credited $2,100. It has a 0 balance, so I have to put a 0 in the debit and credit column and put $320 back up on top. And then the moment of truth, when you get to it, check, answer. Oh, I made a mistake somewhere. You 3? Oh, no. You got 0 wrong? Good job on not copying me then.
It must be in the posting.
Yeah, it's got to be in the posting.
Don't tell me mine's off. I don't know mine's off.
Wasn't mine capital. Wasn't my drawing.
Oh, mine was in sales. Sales? Yeah.
Oh, I typed in 5,111 in my income
That's what I
summary.
did too.
Oh.
Yours is it doesn't check your income.
Income summary?
Check your
So there you go. You can go ahead and rock the on your own. Good luck.
Does it seem greater?
No.